But it's causing some action in our market, isn't it, Ryan? How are
Oh
applications
yeah.
for you this week?
Man, last week and this week, we've seen quite a jump in activity. An enormous amount of people looking to get in the market. We weren't sure if it's because, things were heating up. It's March, a lot of people are in spring break starting to look, or, but a lot of it has to do with the movement in interest rates. The bank, being insolvent, it was huge news, and it is kind of starting to get out there that rates are being impacted, rates are going down from it. So we have seen a jump in activity, especially over the past 48 hours. You
Yeah.
too?
Hey y'all, Katie here with Team EvoAZ, and welcome to the Arizona Monthly Market Housing Update with Matt and Katie, where you learn all about the greater Phoenix area housing market, including information on interest rates, what's happening with housing prices, and tips and tricks for buyers and sellers. Please like, subscribe, and download our episode so that we can continue to get this real news out to the real people.
Well, hey everyone, it's Katie
Matt,
and we are back
how
with
are
our
you?
very favorite lender, Mr. Ryan Gilliam with Waterstone Mortgage.
Hello,
Woo-hoo!
everyone. Hopefully, you're
Hi,
having a
Ryan.
great spring break out there.
Heck yeah, I hope everybody is. The weather has certainly warmed up here in the Phoenix area, so I'm real happy about that. It's been cold.
I'm enjoying it.
Yes.
I'm enjoying the 80s again. It's been a while.
Yeah, it's very, very nice. So that's not the only thing heating up though, guys. The market is crazy. Let's talk about rates because we had quite a bit of movement, didn't we, recently, Ryan?
Yes, we did. Gosh, it's been a busy week. I mean, on Friday, we got the BLS jobs report. That's Bureau of Labor Statistics. And what that showed was that, unemployment is rising and hourly earnings and average hour worked is declining. Now, this was a big shift after, we got a great report on February showing that hiring has been going up. But most experts knew that a lot of the employment in that report was more seasonal. And, some of the big layoffs that you're probably hearing in the news, from like Facebook or Meta, and all the other tech
Microsoft.
companies, we hear something new every day, it seems, about that, would
Yeah.
eventually start reporting on this report. And it did. That was reflected. It was a disappointing report for the economy, of course, but it was good for mortgage rates because, when there's job losses, earnings drop, and that really limits consumer spending. When that happens, of course, it lowers inflation, which I know we talked about before a lot, but if you're new to listening to this, when inflation goes down, rates go down with it. So that was good for interest rates on Friday, having a bad jobs report. And we did see rates slightly drop. But the biggest news, I'm sure everybody has heard this because it's kind of the top news story out there was, over the weekend, Silicon Valley Bank, the 16th largest bank in the US, it basically is insolvent and they're on the verge of collapse right now. So it's pretty scary. It was run of the bank, and the Federal Reserve and the FDIC really has to step in to kind of save it and guarantee customer deposits. So, that there was a big jump really in rates with the Fed over the past 12 months. Obviously, I know we've reported on this on the podcast, since we started seeing the Fed rate increases. And, bottom line is because banks have to pay their depositors more interest than what they're getting back in loans that they've had out in 2020 and 2021 with lower rates, it's really kind of causing some banks to be in a little bit of a squeeze. So bottom line is what people think now that this is happening is that it's going to pressure the Fed to really drop rates sooner than initially expected. And that's going to help lower mortgage rates as well. So two huge news items. Matt, I'm sure you have something to say about that as well.
Yeah, we see him smiling
Oh,
over there. I know
Yeah,
that
he's
face.
chomping at the bit.
yeah. No. I just felt the whole bank thing, it came to everyone very unexpectedly. And I think, throughout these times, we're all looking at what are these ingredients that can come out from what the Fed has to say, from just regular economic reportings, and how is this going to affect our daily lives? And a lot of us are applying this to interest rates. And of course, our lives is all about the mortgage rates. And they don't operate the same. Like you said, the Fed could raise the rate, but with positive information, while that rate goes up, mortgage rates inevitably go down. So then you have this whole SVB, which I just, tinfoil hat, call it as you must. It just seems almost like too perfect. You got this super, super wealthy bank that's just, built around startups. It's not just everyday mom and pops that are affected by it. You've got, the Fed initially getting this news and reflecting upon that data, like, hey, this isn't just like it's a normal a Wells Fargo or something where people that just have their life savings in this and they're living check to check or whatnot have this as their bank. No, this is very wealthy individuals, most of them. And they originally were like, we're not going to do a thing. And then not even like 24 hours, 48 hours maybe later, they're like, all right, we're going to help out. So I don't know. I thought it was just really interesting just to see how everything changed so quickly, how everyone wanted to approach this. And I think it's very fitting with everything we've seen from the Fed over the last 18 months.
But it's causing some action in our market, isn't it, Ryan? How are applications for you this week?
Man, last week and this week, we've seen quite a jump in activity, an enormous amount of people looking to get in the market. We weren't sure if it's because, things are heating up. It's March, a lot of people are in spring break starting to look, or, but a lot of it has to do with the movement in interest rates. The bank, being insolvent, it was huge news. And it is kind of starting to get out there that rates are being impacted. Rates are going down from it. So we have seen a jump in activity, especially over the past 48 hours. You too?
And we're seeing the same thing. I mean, just over the weekend, all of the properties that I dealt with between buyers, listings, whatever it is I was doing, it was a very busy weekend, but everything had multiple offers. I think that the most multiple offers that we had on one of the houses, Matt, for one of our buyers was 7. Yeah. So we're starting to see, more than 2, 3 offers at a time coming. And I'm noticing that as long as we are priced appropriately for our condition and, obviously we get the word out, we do some marketing, properties are going fairly quickly. Like it's just, they're really not sitting anymore for these, 50, 60 DOMs. It's just not happening.
Yeah, absolutely. And I think with the news of the bank that kind of affected the rates very unexpectedly, no one expected interest rates on mortgages to drop the way they did on this news. And it was a gift because the timing of it was like anyone that's already prepared for, okay, we're digesting low 7s and potentially higher. Let's just keep looking. Boom. It's just now motivated them to act even quicker. And then anyone that was sitting on the fence or closely by is now jumping at it. So even if rates trended back up slowly and kind of hovered where we're at, if anything, I feel like this is just one more good wave that's really helped things out in Phoenix.
Yeah, absolutely. And it's great because there's a lot of buyers that, I'm starting to see come back sort of into our atmosphere that we were talking with a year ago that couldn't put their toe in the water. They just weren't able to get into something. And now it's kind of opening up that door for them. So it's really great for those people that want to be homeowners.
It is great. Yeah. And I think just one of the bigger shocks of the people that are starting to go back out there and look is how low inventory is, just how little options there are out there. I was reading a really interesting article on Yahoo Finance, and this was a kind of a report by Goldman Sachs where they talk about something called the lock-in effect. And they're saying that inventory will stay tight, and we might even see greater declines in inventory because the majority of borrowers that have rates right now below the current market rate want to hold on to those rates. If you got a 2.875% in 2021, and thinking about selling and buying again, do you really want to get a 6.875 today? They're going to be less inclined to do anything and want to stay put. And that lock-in effect is really going to be a constraint on inventory.
Totally agree. I'm seeing that just within our immediate clientele as well in the conversations that I'm having. Pulled some stats just before we hopped on the show. Of course, I, do pretty much daily, but I did for the day this morning. And we're down to just about 3 months inventory, and that's AR MLS as a whole. Wow. And that's down quite a bit from last month. They were reporting well over 4 months. So it's down about a month, which in a month is quite a bit. For those of you that have been listening to the show for a while, you know that Matt and I kind of pull a little bit of different stats just because we wear different hats on our team here. And for my statistics, I like to watch single family residents because that's mainly what I deal with. And I like to watch Pinal and Maricopa County. We're in the 10,000s right now. I have not seen 10,000 since last year. Well, I saw lower last
Yeah.
year, but you know what I'm saying? Like since about this time last year.
Were we like around 22 or 23 at one point, kind of
As a
at the
whole,
high?
yeah. So I pull, you know, I drill it down to county because in our arm list, we will get like outer lying areas that I don't feel are close enough to the Phoenix area to really affect what we're doing. So I like to pull those two counties, which is, it's mainly the counties that we work in. But yeah, as a whole, with all of those outer lying areas and all property types, we were definitely, you know, pushing 20s, right, Matt? I mean, you were looking at that.
Yeah, if even from like just from your stance, I'd say yeah, easily between 15 and 20,000 on single family. And we're seeing the same exact thing. The numbers that I just pulled, and I do the same thing, Maricopa and Pinal County, but I look at everything that's active. So that would still be, you know, apartments, condos, anything like that. And yeah, we're still trending down, and we are down 33% from the high that I tracked, and that was November 1st of 2022.
Crazy.
So, you know, I mean, here we are. And, you know, the other interesting thing that kind of ties along this with the inventory is I think, you know, you look at the pool of people that really came off purchasing here in these last few years, and it was the millennials, maybe some Gen Zers, but like a lot of, I'd say the middle to older ages of millennials. And they're at this stage of their life too, where they really realize the importance of having real estate in your portfolio.
Yeah.
And I think them being able to see what has happened with real estate, everything that's happening with the rental markets, now their own lives, and kind of, I think everyone was in this position where they were kind of assuming the worst. Let's look back at September of 22, when we had no idea where this inflation was going. World War III of talk was happening everywhere. It was just so much uncertainty. And I think now people are realizing, hey, we really dissected our own lives to find this confidence, to make sure we're doing things right. And I think people are coming out of this saying, you know what, we're really confident. And I think a lot of these people that do have these homes that are locked in at the lower rates are going to say, I'm not going to sell my home to buy the next home. I'm going to keep this as a rental, which is going to further contribute to our inventory issue here in Arizona, which I think is going to be interesting.
Totally agree. And I mean, personally, I think that's a great idea. I love to see people with rentals in their portfolio. I think it's awesome. But you know, we're also seeing, Ryan, and you tell me if you're seeing this too, we're also seeing buyers that want to come to the table, but they don't necessarily have down payment funds, and they're kind of looking to DPA and things like that. Can you speak to that a little bit?
Yeah, yeah. You know, the majority of our buyers that we work with are first-time home buyers. It's really just kind of what I've been doing since I got started in 2006, is working with first-time home buyers. And the most requested program is down payment assistance, obviously. But the problem is, you know, a lot of the local grant programs have higher rates. You know, you have to pay some of the grant back if you sell or refinance a home within a 3-year period. So at Waterstone, we decided to roll out a much more competitive zero down program called the Powerhouse 100. It's a cool name. So just some highlights about it. There's no down payment. It's 100% financing. There's no income limits, which is big because a lot of local grant programs, there's a max income that you can't go over. This one does not. You could make $1 million a year and still be okay and qualify for this. And you could go up to $726,200 loan amount. Just need a 720 score. You need to have at least 1% of your own funds in savings for reserves or closing costs. And we just rolled it out, and it's really popular so far. We bring it up to everyone, and a lot of people are interested in it. So if you're looking for a brand new zero down program that has great interest rates and very competitive, let us know.
Awesome. I think that is a great program. Thank you for sharing that with us and with our audience. I know that there are a lot of people that will really help, you know, become homeowners this year. Anything else, guys? Any predictions for the month before we wrap it up?
Oh, it's going to be an interesting summer, I feel. I know in the last podcast, I mentioned how in May, you know, because right now when inflation is still the big, you know, what interest rates are going to be doing depends on inflation. The number one thing. And the report that we just got out today was pretty much showing that inflation is pretty sticky. It's taking a while to drop, even though the Fed has increased their rates. But I know I mentioned it, like I said, in May. Finally, you know, shelter costs are going to be factored in and show that shelter costs have gone down. And that's really going to drop inflation. So we do feel in May, we're going to really see a shift in lower in rates. So it will be really interesting. We talked about inventory, you know, and how that's really tight right now when we're talking about rates going down, which is going to increase demand. So it's probably going to be a pretty busy summer. So, you know, if you're looking to buy, we're recommending, you know, Try to do it before the summertime and things get a little hotter.
Yeah, exactly. Physically and figuratively. I
Yes.
totally agree. I think it's time to hop on it. And it's kind of coinciding with our normal busy season anyway.
Yes.
This is when we're typically super busy. So
Yeah, which is really strange right now because we usually don't see this type of uptick in the middle of March, February and March, where we've seen inventory drop.
not quite this
Buyers.
much. We're just getting ramped up
No.
usually right about now.
Yeah. And so, yeah, I think the summer is going to be very interesting. And I think this is a really good time for anyone that has a friend that's looking to purchase to let them know that, it's important to take advantage of these market conditions if you do need closing costs, seller concessions, if you do need help as far as getting some money from the seller when you're purchasing. These are the first things that are going to disappear, and we're already seeing it. We're already seeing it just this week with our buyers, especially if you're looking to buy, in that range between 700,000 and 500,000. It's very popular right now.
Unbelievable.
And so I just think if you're really banking on, getting those seller concessions, or someone that is and they're talking about it and they're kind of dragging their feet, I really, really think they should just really have a good hard talk with themselves and someone that they trust, because that's about to disappear. And it's just going to be growing even more frustrating for that person that was kind of counting on that money. And now all of a sudden they're not getting that, and they're going to be waiving some other things potentially. So I do think this is the time. If someone's really, really saying, hey, I want to jump in and I want an opportunity, this is it, because I do think we're going to drop an inventory. Phoenix is really going to rear out. I think we're going to come out of this thing first, like we've done in the past. We're going to kind of be this national beacon. When you start looking at a report that just came out, it was about our hotel industry and how we were one of the most fruitful already as far as their projections go for 2023 compared to other cities in the country. Well, another report came out and they're like, it's even better than we thought. So that means a lot of people with, disposable income are traveling here, and those people are going to be buying here, and they're going to be spending their money here. And at the end of the day, that's kind of be the lifestyle that kind of holds up Phoenix, and it's just going to move forward. So
totally agree.
Yeah.
And to speak to your advice a few sentences ago about, those who are out there that really want to buy, to seriously look at this time, because we are in a shift and we are still seeing, some concessions and some lenience toward buyers right now. That's going to go away quickly. And if these buyers don't make a move, they're sitting in high rents. So
you're right.
They're not making equity. They don't have any write-offs. They got nothing going for them except for high rent.
And rent will go up. If all of a sudden inventory drops to the point that it's an issue where people are bidding, and that's the driving factor, and rates really don't play, even if they're still high, guess what? Rents are going to go up first.
Yes.
And Phoenix has always been an interesting area for rents when you look at us compared to like California and these other areas. To be able to rent a single family home for the amount that you've been able to in Arizona is very, very unique. When you've always looked at like California and these places, and you hear people saying, oh, you have to pay $2,500 a month for a 1-bedroom apartment, or stuff like that. Arizona's never really experienced in that, and people have been complaining, oh, our rents are so high. It's like, wait, no, you don't even understand. Like,
Right.
And I think that's exactly where we're approaching that. You're like, oh, am I going to be able to get a house and rent it out? Oof. It's going to be difficult.
And a lot of conversations that I have with first-time home buyers or, current renters, people who have never owned a home before, they don't realize that owning a home is a hedge against inflation. It's a hedge against these increases in their cost of living. They don't get it. They don't think about that. Their mind is not there. They're not thinking, I've got a fixed rate for 30 years and my cost is not going to fluctuate. Of course, we have taxes and insurance that might change. But other than that, other than HOA, taxes, insurance, which everybody deals with, my payment's not going to change. And I don't think that they really think that through or keep that in the forefront of their mind when they're thinking about owning real estate.
No, and I think you're exactly right. And it's scary. And I think a lot of people can take that path of least resistance to kind of apply that to their fear of purchasing. Oh, where I can move if I want to. I'm not obligated to this. And I think
Yeah,
they're
but
going to kick themselves in the butt really
right.
hard, because that the problem is you have to live somewhere, and the older that you get, that it happens very quickly, and then all of a sudden you're like, it's like Murphy's Law. But when you don't want to move and you're in a rental, all of a sudden your landlord's like, guess what? Your rent's going up, or you have to move, and you're like, shit. And the other thing with people get really nervous about on the purchasing side is they're like, well, we don't want to be obligated, or we don't want to be house poor for this 30-year mortgage. And it's like, wait. First off, this is a really good investment if this is your first purchase. And secondly, I look at it as forced savings. I feel like a lot of these people that are making these decisions that are a little bit leery of the obligation or the commitment to a home, they might not be the most disciplined when it comes to savings. And that's why they have these financial worries. Where when you do purchase a home, it's almost like this forced savings where you're obligated, that you know you're going to be paying this, you're going to adjust your lifestyles. You can't touch that money in equity. It's not there just for you to spend. And that's how it ends up happening. And you blink your eyes, 2-3 years go by, and you're like, holy shit, I've got, an additional $40,000 or $50,000 in equity. I've now even paid off an additional $10,000 on this. And then I got all my tax savings and stuff. So that's where I really push it. I really feel like if you are scared, really look at why you're scared, and this could be a blessing.
100%. Totally agree. All right, guys. There was a lot of information packed in this 20, 30 minutes, whatever it was. So thank you so much, as always, for your amazing expertise. I just love talking to you guys because you are super experienced. I mean, Ryan and I, we've been in the business, I think, since the very same year. You're working on 17 years, right?
Yeah. Well, 2004 to 6, kind of. Yeah.
And Matt, he's our veteran. He's working on 20 years, I believe. And so, combined, we have a lot of experience. We've done a lot of transactions. I was having a conversation the other day with a seller. I went on a listing appointment, and I was up against another agent, and we were discussing experience, because I'll always bring that conversation to the table. Less experienced agents don't do that, of course. And so we discovered that I have sold 1,132 more homes than this agent that they were also interviewing. And once she found that out, that sealed the deal. Because let's face it, like, you don't want somebody without experience to be handling the most important asset of your entire life. It's just.
No, 100%.
Anyway.
Especially in markets like this, when they change quickly. And that's where the biggest, the importance of experience lies, because you need someone that can make quick decisions and guide you the right way, not just based off the news that they're reading or their mentors telling them. It's actually someone that has tasted and felt it and experienced these market conditions before. Because
we have insight, because we can see past that actual incident. We can see how it's going to affect things in the future. We know the politics of it all when it has several parties involved. Like, there's just so much stuff. Yeah. It's a total other show to talk about that, but it makes a big difference. So I really appreciate you guys being here with us every month. It's awesome. I know our audience loves it. Our audience is growing leaps and bounds. I'm getting lots of comments. So thank you guys out there for your comments, your messages. I really appreciate it. I love that you're loving the information. If you want to catch up on any of our other shows, or perhaps our last couple of market updates, if you haven't listened to them, I would suggest going back a few months so you can kind of hear the progression of our reporting. And you can hop on over to our YouTube channel. It is at Team Evo AZ. That is our handle. If you're more the audio version, you prefer the podcast, maybe you drive a lot, run a lot, whatever it is, on your favorite podcast platform, just do a search for Arizona Real Estate Radio. You're going to come upon our podcast channel. We don't run things like normal podcasters do out there, where they have one show per channel. We have a channel for all of our shows. So if you subscribe to that, download it, like it, whatever it is that you need to do to get the notifications, then you will be notified every time we have a new juicy tidbit. So thank you so much, Ryan. Thank you so much, Matt.
Thank you.
Until next time, guys.
Bye, guys.
Bye, everyone.
See you later.